Hello everyone, Dave Landry here from DaveLandry.com. This is Trading Simplified. So what are we going to talk about? Well, for the methodology in action, I have a new mystery chart. I want to follow up on some older ones. For trading psychology, I want to introduce you to the concept of a knowledge gap. And the thing about a knowledge gap, I was thinking about this as it's going live, is the reason it's just an introduction is because this could spawn off or could spin off so many different conversations about hindsight bias and holy grail hunting and so on and so forth. And I'm going to touch on a few of those this week, and I want to continue to talk about that in coming weeks. I want to also continue to talk about crypto, and it's not about the crypto. And this week, it was very important to use money management with crypto, as it always is, and in any other market. And that'll make a lot more sense when we get to it. Housekeeping, I do take requests. Instead of trying to read your mind, it's a lot easier if you just tell me what you want to cover. If you need to reach me, DaveLandry.com/contact. If you want to send me some requests, I'd be happy to receive them. Also, if you would like to attend a webinar live where you can ask questions live and bring your favorite stock picks or crypto picks, go to DaveLandry.com/webinar. If you want the slides from this presentation and all the other presentations combined, which include a lot of the rules and systems and so forth, money management, and a ton of trading psychology, go to DaveLandry.com/StockCharts. I'll also give you all three of my books in PDF format. Get to know me first and then move a little further down the line, and there's some products that I obviously have if you are interested. But again, get to know me first by going through this link. If you need to reach me on Twitter, at TFollowingMoron. All right, for Mind the Trade, let's talk about the knowledge gap. Now, a lot of the things that I'm going to talk about today come from Mark Douglas, or at least the term knowledge gap. I couldn't really find any direct references from Douglas, but I know that he's part of the genesis of me thinking about the knowledge gap. So I want to give him credit, and as I find where he's written or has presented on this, I'll let you know. Now, on a losing trade, a knowledge gap will lead you to believe that you knew more, that if you knew more, you could have avoided the loss. Now, there is one caveat, obviously, about the knowledge gap, and that's assuming that you already have a conceptually correct methodology and you already have some experience. And I often say, not to go too far off on a tangent, but I often say I've never met an unsuccessful paper trader. And I did meet one guy once at a conference I was speaking at, and I'm like, well, how long have you been trading? And he said 2 weeks. So obviously he has a knowledge gap. He needs to learn a lot more about the markets. But I'm talking about once you get a little bit of experience, and it doesn't have to be anything complex. In fact, that's why I call this show Trading Simplified, and I have a trademark on Trading Simplified, because I believe in keeping things simple. Something as simple as a Landry light pullback, or just generic pullbacks like we'll talk about today in a few of these setups, or almost all of them, can work quite nicely. So assuming you have something that's conceptually correct, something that makes sense, you're trading with the trend, you're waiting for entries, you're using stops, you have initial profit targets, and so on and so forth. A lot of that, again, I'll walk through in just a few minutes. Then stress over a knowledge gap means that you are assuming there is a holy grail, which doesn't exist. So you're assuming that if you only knew more, you could have avoided each and every loss. And that's just simply not possible. So there are many reasons why you lose on a trade. And one of them would be lack of experience or a knowledge gap. So make sure you have been trading for more than a couple of weeks. And if you find a setup of mine you like, or from anyone else, find 100 examples. Find some that worked and find some that failed miserably before putting your hard-earned dollars on the line. Now, another reason why you lose is bad luck. It happens, okay? Now, you got to be really careful here, and Andy Duke in Thinking in Bets talks a lot about this. Bad poker players will blame bad hands or bad behavior or bad playing on bad luck, and when they win a game, even if that game is won through luck, they will attribute it to skill. So that's one of the big things that we have to work really hard to figure out is it skill or is it luck? But bad luck in this situation is it happens. Something just kind of out of the blue happens to happen that you would have no idea in a million years that it could happen. And none come to mind in the position trading, but I'm sure there's quite a few. But not that long ago, a Fed, it might have been Powell himself, made some off-the-cuff remark, and then it just decimated all of my positions, and it was really frustrating. And that was on the intraday stuff, but you get the idea. It, often spelled with a silent SH, happens. Now, it could be a statistically valid loss. Some of our trades will result in a loss. And in fact, with a trend-following methodology, sometimes the majority of your trades can result in a loss, but longer term, you're able to make good money because you catch that occasional big home run. Or you might just stop out on a few after hitting an initial profit target. I'll walk you through that in just one second. Now, the other thing, and this is where you can go off on many different tangents by starting with the knowledge gap, and this is some writing that I'm working on right now, and that's by not seeing what is. And that's not a knowledge gap. That's something that you're looking into a trade, and I try to do a presentation and not say this every presentation, but Sakota once called it intuition versus intuition. And sometimes you need money and you're trying to make money and you're trying to just make something happen that really isn't there. And I'm going to talk a little bit about how to see what is, and that's a subject for hours and hours of discussion, being able to see what is. I know it sounds easy. Hey, the market's going up, the market's going down, or the market's chopping sideways, but it's a lot harder when you're in the trenches and you're trading it. Now, avoiding the knowledge gap angst, you need to, again, pick the best and leave the rest to begin with. Now, I know that sounds cliche, but we often pick mediocre setups. And the reason we do that, and usually it's the more successful people and the smarter people that tend to do this, and that's because we're trained as professionals, as doctors and lawyers and automatic transmission mechanics, to take whatever train wreck comes along. And this line of reasoning comes from a psychiatrist who's a client of mine who explained to me why a lot of successful people are prone to pick bad stocks. And that's because in their line of work, they can't wait around for the perfect client, the so-called fat pitch. They have to take whatever comes along. Now, again, you can see how we can go off on many tangents on this. But work hard to pick the best and leave the rest. One of the themes I've been talking about quite a bit lately is separating extraneous influences from your trades. And that could be a fight with your spouse or significant other or both. It could be life. It could be recent trading. It can be boredom. You know, it could be something as simple as you're hungry. And there's actually been studies done where they look at the sentences given to people who are indicted or their parole, and you're much more likely to get paroled or not as harsh of a sentence if you get sentenced after lunch. Before lunch, the judge tends to be a little hangry, and I've noticed that in my trading too. Now, one thing you can do to help that tremendously is to document, and that's one of the dead horses that I beat quite often. Now, of course, you need to ask yourself, and again, referring back to prior presentations, is there really a greater fool? Now, remember, as I've said before, we are greater fool hunters. Without the greater fool, we can't make money. A greater fool has to come along and buy the stock from us or any other market at a higher price. And always ask yourself, am I the greater fool? What does the other guy know? A great example of that is last Friday, I bought a bunch of options that were so cheap, it was just ridiculous. I couldn't pass them up. And I'm like, why would they be selling them for that price? Well, the stock never went into money, and the guy was able to collect the money on those options. Not that I suggest you rush out and sell options, because that's a great way to have a very brilliant but brief career. But the guy who sold them to me knew they wouldn't be worth more than what I bought them for. So he was happy to unload his books onto me. Now, you have to do a brutally honest post-mortem on every trade. Was the setup really that great? What are you seeing now that you should have saw back then? Now, you often hear about a hindsight bias. Well, hindsight bias assumes that you would have known the information at the time of the trade. A hindsight bias assumes that information you only know now, you would have known back then. But that's not what I am talking about. I'm talking about what was really there in the chart. So your intuition, again, there's that Dakota thing, might be there, but was it really that great of a setup? Was there trend? Was there persistency of trend? Was there Landry light? Were the bow ties in proper uptrend order for uptrends? And so on and so forth. Does the stock trade cleanly, or does it look like an electrocardiogram? And a lot of those things are going to be very clear after the trade is said and done. But you have to work hard so you're not seeing those things that are already there. This foresight in hindsight. You're only seeing it in hindsight, but you have to work very hard to see what's there. Now, of course, there's going to be some hindsight bias no matter what. But as long as you can take solace in the fact that you did the right thing, you picked the best setup, then you could chalk it up to it happens. Now, one of the things I've been working on quite a bit in my writings is a pre-mortem. Time travels to the future and explain why you took the trade. You took the trade because of all of these great reasons. All the things I just said a few minutes ago. It was persisting in its trend. It was trending nicely higher. It pulled back. It traded cleanly, and so on and so forth. All the things I preach about when it comes to stock selection. So make sure you document all those things ahead of time, and then that way, after the fact, you don't go back and say, well, it really wasn't trending, or it wasn't doing this. One thing I've been noticing lately in my Facebook group, and I've actually been writing about this, is watch your butts. And right now, there's just not a whole lot of great trend setups out there. The market is just chopping around. And I notice a lot of my clients in Facebook, when they bring up a stock, they're like, I like this stock, but, and I like this stock, but, and it's like there's a lot of buts, and they seem like they're really anxious to take the setup in spite of all those buts. Well, the thing is, you have to wait for the best setups. And recently, one of my clients told me that I'm too selective to a fault. And he quit the service after a year of mostly being bored to death because we were in a bear market. And I would show setups in my Landry lists, but I would say I'm not taking any of these, and I wouldn't show any, or that many, I should say, official setups. Now, we did okay overall for the year, but it wasn't one of the best years ever. Bear markets are pretty tough due to their choppy nature. But the bottom line is, he said that I was too selective, and I actually took that as a compliment. I think he was trying to give me a little constructive criticism, and that's why I put out the Landry list. I show the setups that might not be absolutely perfect, and then the ones that I think are the best, the ones that you see here as the mystery charts, are the ones that I select. Okay, let's shift gears and talk about how markets are markets. Lately, I've been saying it's not about the crypto. And I want to show you how I use the exact stuff that I use in stocks and other markets to trade crypto. And this week I want to focus on the importance of money management. As I've been saying, it's not about the crypto, it's about trading. And if you learn how to trade, you can trade any market. Let's say the crypto market goes away tomorrow. Well, maybe something new will come along, or something old will come along, like stocks or commodities or whatever, and you'll be ready to trade them whenever that market, whatever it is, heats up. So last week I talked about this particular stock, just a generic pullback. It didn't quite pull back all the way to the 30 EMA, which would be a Landry-like pullback, but the fact that this thing thrusted so high, almost a 100% run, before pulling back, I thought it was worth a shot, even though it didn't pull back all the way to the 30 EMA, and it was a fairly deep pullback. Now, I did have an aggressive entry. I got in at that yellow line. My stop was down here below the 30, and my initial profit target was at this level here. Now, you can see here's the actual trade down there, and you can see where I took profits at the initial profit target. You exit half at that level, and then you bring the stop up to break even. So this was the one we talked about last week, so I wanted to follow up on this. The idea is to establish a free roll. If you go back and look at some of the older presentations, or I think it was last week, I showed an older spreadsheet where we had huge open profits and one stock up 600%. And it had me kind of dreaming about those days again. Well, they'll come again. It just might take a while, and it might take a lot of patience, and it might take a lot of sitting on your hands. But the way you establish those positions is, number one, of course, garbage in, garbage out, or as Papa John would say it, better ingredients, better pizza. Make sure you have a really good setup going into the trade, and then make sure you wait for an entry and use proper money management, all those things. And if you do that properly, you will occasionally get what I call a free roll. Now, free roll means you've exited half, your stop comes up to break even, as you can see here. So the worst, barring overnight gaps, and it's crypto, so it doesn't gap overnight, but it can be a little thin. The worst you could do is break even on the second loaf of your trade or the second half of your trade, and you make a little bit of money on the first half. Now, if you could do this over and over again, and of course there's going to be some outright losses here and there, but if you just keep chipping away at it, lose, 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 free roll, free roll, free roll, stop out, free roll, stop out. In other words, what I call the better than the poke in the eye trade, then eventually you're going to catch some really big trends. But as you can see in this case, money management is crucial. So if you do stop out, think about what you've accomplished here. You took some money off of the table, whether it be crypto or stock or whatever, and you had the potential for a huge winner. And if it doesn't materialize, it doesn't materialize. You've got a little bit more money in your account, and you can move on to the next trade. Now, notice if you would not have used any money management whatsoever, you had this profitable trade overall turn into a losing trade, and the losses are continuing to mount. Now, here's another trade that I took, and you could see that my entry was at 0.03874. My initial profit target was 0.0465, and then I stopped out of the remainder of the trade. If you look over here, you can see my stop was at break even. So I entered here, I took initial profit targets here, my stop was here. I had a little bit of skiddage, which is okay, and overall, I made a little bit of money on the trade. So if we take a look at that in the chart, you can see that in this particular case, by the way, I just bought a pair that was going straight up. And I'll talk about that a little bit in 1 second. But you can see, again, I was able to get in, take partial profits, and then stop out for what I call the better than the poke in the eye trade. Now, once again, I'm going to say next. Now, you might notice that this thing skyrocketed nearly 100%. Why did I not capture more of that? And I should have. And what we do is once we are free rolling, so to speak, we then take this stop and we begin to trail it higher as the market moves in our favor. By the way, boy, if I found a brokerage with automated trailing stops in crypto, that would be the monster. I think I could really master the market, because what you could do is put an automated stop in and let it follow this market up. But you can see it did shoot way, 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 way higher, and then it imploded. Now, if you would have taken the trade without any money management or taken any profits, you'd be at a pretty serious loss on the trade. Now, getting back to why I gave up so much of those gains, this was last Saturday, and I had a lot of honeydews, and I was in here trading crypto, and I knew at some point in time I was going to get in trouble. So, not to make any excuses, but what happens was I put in my limit order, and I went on about my life, and the next time I checked it, it had already come back in quite a bit, and it looked like I was going to scratch out in a trade for a better than the poke in the eye trade, which I eventually did, obviously. But when I checked it later in the afternoon, I was bummed out because it nearly doubled in price before it imploded and then stopped me out of the remainder. And that's one of the tough things with crypto, is when they move really fast. It's one of the great things, but it can also be sort of tough when you miss such a huge move. Now, inspired by several of these 100% overnight moves that I've watched evaporate, or in this case, in the afternoon. And by the way, maybe I could set some alerts or something. So even if I'm out doing honeydews or whatever I'm doing, at least I'll get an alert to let me know that this market is going absolutely crazy. But one of the things I've been noodling with, and I started doing and putting the actual orders in, is, remember, we exit 50% at the initial profit target. But what I think I'm going to begin doing with these cryptos, especially these thin cryptos that are just wild and crazy, like this Lava X, whatever the hell that is, I'm going to flip out 10% at 100% gain. So I got to thinking about it, and I still have 40% of the position on should this thing go up 300, 400, or 1,000% or more. And if it doesn't, especially on an overnight 100% spike overnight, then at least I was able to get a piece of that spike off. And that's pretty significant to double your money, even though you're only taking 10% off. That's still a substantial amount of money to be putting in your pocket. Now, while I was putting together my slides, I actually triggered into this one. Now, this is a breakout. And sometimes when crypto is going straight up, you could just buy the breakouts into brand new high territory. I'm not a huge breakout trader or fan of breakout trading because more often than not, breakouts tend to fail. But when a market is really, really hot, kind of like 1999 in stocks or right now in crypto, of course, right now it comes and goes. I told my clients in the last week of charts, it's like 1999 and the next day it's 2000 and it's 1999 again. So there's a lot of these crazy cycles that are happening. But sometimes you could buy the ones that are going straight up. I bought this one earlier today and I got long right around this level here. I put in an order to flip out 50%. And right before I recorded this, it actually hit that IPT. I also put in an order to flip out 10% at a double. Now, it's wishful thinking. I realize that. But if I get there, at least I'm pulling some money off the table. Now, here's the actual limit orders I put in. One for 50% of the position, and then another one for 10% of the position should that hit. Unfortunately, there's actually a fortunately, it did hit my initial profit target while I was doing this presentation. And unfortunately, it came back in and stopped me out for better than the poke in the eye. Well, that's one more good trade under my belt. I didn't knock it out the park, but I have a little bit more money in my account and I can go after some new trades now. So it's not about the crypto. I know there's a lot of people that are poo-pooing crypto, and you know what? I think it's mostly BS too. It's like some of these things are NFTs of pictures of cats. And they change with the moon phase. It's like, well, this is stupid, okay? But if these things are going up and you're using a heavy dose of money management, then go in and take some money and make some money off of that stupidity. And if you want to poo-poo them, then by all means, go out and short them. But I would recommend you short the ones that are going down and make darn sure you use serious money management because these things can go up 100% or more overnight. Markets are markets. Markets are driven by human emotions, period. And markets are markets. So human nature is human nature. Fear and greed is human nature. But just make sure you have a methodology in place. As I've been saying, pullbacks can work great. Take a look at Landry like pullbacks, and if it's on a really great run, it doesn't have to pull all the way back to the moving average. Breakouts can work too, but only when they are running. So you got to use caution with the breakouts. As I just preached, money and position management is crucial. You want to position yourself for limited losses and the potential for unlimited gains. All right, let's shift gears and talk about the methodology in action with a focus on stocks. So here's a mystery chart that was shown a couple of weeks ago. As you can see, it did trigger an entry, but unfortunately, it hasn't done much since. And you can see it's just continued to kind of slide in here. So we have a stop in place just in case. This looks fantastic. It's a little wide and loose and a little volatile, but that comes with cryptocurrencies. This is a mining company. Now, here's one that I wasn't able to show as a mystery chart because I was on vacation when it triggered. Vacation, I laughed at myself when I say that. I don't take much time off. Anyway, you can see there's the parameters, 1815, 1575, and 2055, 2.4 risk. And that's the entry, protector, stop, and IPT, and then risk, obviously. It was a hot IPO. You can see it made a really nice thrust from lows. Had a nice, fairly deep pullback. It triggered an entry here. You'll see in my trades that I actually use a little bit of discretion. Stop was down here. Initial profit target was up here. So here's my actual trades. And on that opening gap day, I did not take the trade. And I ended up taking the trade on a retrigger. And then I flipped it out. I actually flipped it out slightly below the IPT. But I did let everybody know not to split hairs before I did that, to let them know that I was in the process of possibly taking partial profits. So here's our new mystery chart. As you can see, there's your parameters. The entries here, stop is down here, and the IPT is up here. This one has since triggered, but it came right back in. So I'm still showing it as a possible setup. And that's why I'm not going to do a reveal this week. Now, shifting gears real quick, and I'll flesh this out in future presentations, but I was just notified that they added my indicators, my plugin, to the scanner. So you can now scan for Landry proper order, Landry light, and other things like that. Recently, a potential client had contacted me, and he was having a really hard time writing bow tie scans. And a couple days later, ironically, they came out with this new feature. So I'm going to follow up on this in upcoming shows and show you how to use that. Well, that's all my time for today. I want to thank everybody for watching. Again, follow-up information, davelandry.com/StockCharts. If you need to reach me, davelandry.com/contact. Again, thanks everybody for watching, and may the trend be with you.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.